On today's episode of Sublime Trades, we're going to talk about some data-driven decision making. We're going to look at some of my spreadsheets and see how I break down my entire set of trades into subsets based on setups and some of the things that I'll look for that will make me either continue pursuing a setup in the future or will let me rule out a certain setup so I can just avoid taking those trades that aren't the best trades for me. So when I'm tracking my trades in my spreadsheet, it's a fairly simple process. For every trade that I take, I'm going to track my date of entry, the date of exit, my average entry price, my average exit price, the level that I'm risking off of when I get into the trade, and that lets me calculate how much I'm risking on that trade based on my entry price and share size. And then I'm tracking what setup the trade is, any other notes I want to take on the trade, my time of entry, whether it's long or short, and a few other things. And so those are the things that I input into my spreadsheet for each trade. And then based on those numbers, I have various calculations and formulas in my spreadsheet so it can give me things like my P&L on the trade, the risk reward ratio based on that initial risk that I took, my overall win percentage. And then once I start breaking my trades down into specific setups, there's a whole nother set of stats, and that's really what I want this video to be about. So let's get into the spreadsheets. So when I'm going through the spreadsheet, there's going to be a lot of formulas and calculations that are occurring in the spreadsheet, and I'm not going to get into those. That'll make this video just way too long and just could be too confusing for some people. You should be able to just look it up online and find how to do various calculations to get all of this data. So this is my reverse split spreadsheet. So this has all of the trades that I've taken that were on reverse splits. So what I did is I have this other sheet called trade log, is where I just capture all of my trades, and then based on the setup, which I have this setup comments column here, based on which setup it is, I'll pull out those rows and put them into their own spreadsheet so that I can analyze just this one specific setup. And so this is about 145 trades. The main thing I want to talk about is these setup specific statistics that I analyze in order to find my win rate, my risk reward ratio, my expected value, standard deviation, my actual value, my average initial risk. And those numbers are what I use to decide whether I'm going to continue pursuing any given setup or not. So I'm going to try to quickly walk you through some of these numbers and give you a brief idea of what they mean. Like I said, I'm not going to go into the exact formulas and calculations to produce these numbers. If you're having trouble finding any of that information, send me a direct message on Twitter at Sublime Trades, or leave your question in the comments and I'll get back to you. Now, all these numbers build on themselves, so some of the numbers are just used for doing future calculations. The most important numbers are the ones that I've bolded, and those are the ones that I'm going to try to briefly walk you through here. And just to give you an idea of what they mean, and because these are some of the most important numbers that I'm looking at when I'm trying to decide, do I have an edge on this setup? Is my edge big enough on this setup that I actually want to continue pursuing this setup, or should I just stop trading this setup entirely because I don't have an edge? Okay, so let's zoom in here and see some of these numbers. So number of trades, that's super important. Generally, I don't give any credence to these stats until the number of trades is at least 20. You need a certain sample size to start having any statistical certainty in these numbers because of the randomness that's part of trading. Look up the law of large numbers if you want to know a little bit more about that. But basically it's saying that the more samples you have, the closer your actual results should come to your expected results based on statistical calculations. So I'm looking for at least 20 trades here. Like I say, until then I'm just collecting the data, and I don't really have a clear idea of whether or not I have an edge. Now here at 146 trades, that is enough to tell me whether or not I do have an edge on this setup. Win probability, so that's just based, the number of wins and the number of losses compared to the number of losses. So in this case, I've only got a 45% win rate. That's not good. I generally like to have a greater than 50% win rate. You can certainly have a profitable setup with a sub 50% win rate, but you'll need to have a higher risk reward ratio because you'll need bigger winners to make up for the more frequent losses. And now these two boxes here this is how I calculate my position size. I use the Kelly criterion. The Kelly criterion is basically taking your edge times your odds and multiplying that by your account size, and that tells you the percent of your account to wager on any given bet. So in this case, that's the edge is your win probability. That's basically the odds are the payouts. So in trading, that's going to be your risk reward ratio. So the way that I calculate that win-loss ratio, I do it two ways. I started doing it at first with my average dollar win and dollar loss. And then I realized that that may not be the best way to do it, because as my account is growing, my position size is going to be increasing. And therefore, since that number is not staying steady, I don't know how accurate it really is in giving me the information that I'm trying to get, which is basically how much bigger are my wins compared to my losses. While I initially was calculating my position size based on the average dollar win and loss, I fairly quickly changed to using the average percent win and average percent loss, because that is something that's steady no matter whether I have a $500 position or a $5,000 position. If I'm winning 10% on my winning trades and I'm losing 5% on my losing trades, I've got a 2-to-1 risk reward ratio, and my position size isn't affecting that calculation. So the win-loss ratio in this case is 1.52. That's low. That's much lower than I'd like to see it. I really want a minimum of 2-to-1, and ideally closer to 5-to-1. And then let's see the average initial risk. I actually just am using that to calculate my position size, because the Kelly criterion will tell you the total position size that you should risk on a given trade. But because I calculate my position sizes based off of my risk level, I wanted this to tell me, rather than telling me how big my positions should be, I want it to tell me how much dollar risk should I take per trade. And then that dollar risk is going to dictate the position size from there. And then these are kind of this is the most important numbers, I guess, because this is really telling me if I have an edge or not, this expected value here. And this is a statistical concept, and it's saying that on every trade, I expect to make $22 per trade in the long run. And so that's saying on any given trade, I might win or lose, and I'm going to win or lose more than that. But in the long run, my result should approach that number. And then standard deviation is a really important one to know as well, because like in this case where the expected value is $22, standard deviation is $252. The standard deviation is so much bigger than the expected value that your results are going to have a very wide range. As you can see, it says my expected loss would be 163 and an expected win is 248, and it's really going to fall anywhere within there. If you know anything about statistics, one positive standard deviation happens 35% of the time in a normally distributed random process, and trading may not entirely fall, or not may not, it doesn't fall under a normal distribution, but I think it's most of the time the results are close to a normal distribution. But so those are the main numbers that I'm looking at just to kind of decide which setups I want to actually trade. Okay, so now I've got stats. I've got a big enough sample size that I have some confidence that these stats are accurate. Now what am I going to do with them to decide whether or not I'm going to trade? Okay, before we dig into the spreadsheets anymore, I want to talk a little bit about this setup specifically. The main ones that we're going to look at today are these reverse split trades that I've been taking. I've been working on this strategy for just about a year now. When I first started, I had a very specific set of criteria, and those trades weren't coming around that often. And then earlier this year, when they did start happening, I had a really good run. I made a lot of money. My stats were showing that I had a very good edge. And then I started to branch out from my initial criteria. I thought that I was seeing potential edges in these reverse split stocks, and I was taking trades that weren't fitting the criteria that I was initially looking for. And so now that I have like a year's worth of data on taking these trades with them falling under various criteria, we're going to go from that sheet that I was showing you that has all of my reverse split trades and is not showing a good edge, and we'll break it back down into some of the different criteria that I was looking at, so I could say that, yeah, I have an edge in this set of criteria, and these other ones I don't have an edge in. If you're enjoying this video, please smash that like button, subscribe to my channel for more content like this, and let's get back into these spreadsheets. Okay, so as I've said, this is all of the reverse split trades that I've taken. My total profit is minus $30. So after a year of taking these trades, I lost $30 overall. My win rate's 45%. My Risk reward ratio is 1.5. My expected value is $22 per trade. All those numbers are crap, especially if after a year I've basically broken even. So that's a very clear sign that I don't have an edge based on all of the criteria that encompasses all of these trades. And you can see here's my P&L for these reverse split trades. You can see I have some good runs and then some big losses and runs, and then more recently a lot more losses. This is the zero line right here. And basically because I know that when I started out I was focused on a certain set of criteria, as I said, I know that I have an edge. So let's break these down a little bit. And one way I would break these down, one of the main ways I would break down my trades that I've taken on these plays is, do they have a catalyst or not? And in this case, when I say catalyst, I'm really talking about a press release from the company or an SEC filing from the company. Either one of those I'm going to find on my scanner. It's going to show up on the day that I take the trade. I want to see a press release or an SEC filing to say that this is a reverse split trade with news. Or if they don't have those, maybe I'm just seeing a technical setup, then that's going to be these reverse split plays without news. So let's take a look at some of those stats. So this is the reverse split plays without news. Total profit is negative $12,000. So that right there should say there's no edge playing these reverse split plays without a news catalyst, just based on whatever technical setups that I was seeing on these charts. There was this bit of an upswing, like I lost about $9,000. Then I came back up. The zero line is right here. I came back up to about positive $3,000 before going back down to the negative $12,000. While this kind of makes you think that, yeah, perhaps there is an edge here because I was on this upswing. Human brains are really good at trying to find patterns in random data that don't actually exist. This could easily be a graph of coin flips and where it goes down when you flip a tail or up when you flip heads. And you can easily get runs like that in a 50-50 random process. And in this case, I did go back and I looked through these trades that were occurring during this upswing. And no, there was no specific set of criteria that was only specific to those trades that wasn't present in these other ones that would say, oh, I can narrow it down and get that edge. And I don't have an edge on these reverse split trades if they don't have a news catalyst or an SEC filing as a catalyst. And so you can see that with these ones, my win probability was about 42%, so even worse than the overall. And then my risk reward ratio was 1. Yeah, like 1-to-1 risk reward with a 40% win probability. That means you're going to be losing in the long run. So looking at the flip side, and so what I did, I took basically all the trades from this initial reverse split all spreadsheet, and I took out the rows. I went through and I found all of them because I put the notes in here in this setup and comments column. I put notes in here saying whether or not it had news, did it have earnings, did it have some SEC filing, or was there no news? And so based on those comments, I can split that up into the ones with no news, which we just looked at, and then the ones with news. Okay, now just looking at this graph initially, there we go, that looks a lot better. This is the zero line here. This is $20,000 up here, and we've got a nice uptrend over a good number, a decent sample size. So on the reverse split plays that had a catalyst, I'm up about $19,000 overall on those. That's about 77 trades. I've got a 49% win percentage. That's right on the edge of what I want to have. And then my risk reward ratio in this case is 2.04. So now my expected value on these trades, reverse splits with news, is nearly $200. It's $196 expected value with an $881 standard deviation. So I have an edge here, and I have a decent enough edge that I would want to continue pursuing these trades. But can I refine that a little bit more? And the answer is yes, I can, because just based on the experience of taking all of these trades and what my results have been, I've found that my best results occurred during pre-market. And they especially occur when the news is coming out pre-market and I can get in right after the news during pre-market. And so because my spreadsheet has my entry time, and I also will mark it in my comments, I'll say that if it was spiking with news pre-market, I'm able to now pull out this set of trades, the reverse split trades that I have that have a catalyst that I took just during pre-market. So now let's look at those. And there we go. My P&L is getting even better. It's even smoother. There's less downswings. This is the zero line down here. And I'm up about $28,000 trading reverse split stocks with news during pre-market. And that was my initial, the pre-market part wasn't in my initial set of criteria for these trades. When I was first taking these trades, I was just looking for the reverse splits with news. And then it was just based on the experience of how they react to, say, afternoon news or after hours news, or like mid-morning or midday news. I've just found that I'm doing best with the ones that have the news during pre-market. So like I said, I'm up about $27,000 on these. My win percent is 57% now. So now that's getting much better. Like I prefer like somewhere around 65% win percentage, but I'm happy with 57%. And my risk reward ratio is 2.4. And that's something that can be improved because there have been quite a few of these pre-market trades where I chased the initial news spike and then the stock reversed really hard and I didn't stick to my risk and I ended up taking way bigger losses than I wanted to. And if I can get that under control, I can actually get this risk reward ratio to increase from this number. And now look at this expected value. My expected value on these trades is $550. Now that's much, much better. In the long run, if I continued betting this position size, I could expect to make $550 per trade on average. And so this is how I find my edge. I have my whole set of trades. I'm with my whole set of reverse split trades. I'm down $30. I've only got a $22 expected value. And my graph is pretty clear that like I'm just breaking even. So then breaking it up into news and no news. With no news, I'm down $12,000. This expected value is wrong. It's actually negative $31. The calculation includes an absolute value in there, and so it turned the number positive. But my expected value is actually negative for playing these reverse splits with no news. Looking at the P&L, it's pretty clear to me that this P&L sucks from the zero line. Like I'm just down. So that's easy to, now I can just say I'm not going to trade reverse split trades without a news catalyst. For now, it's possible in the future I can hone back in on certain specific technical setups or other criteria that I could use to potentially play these. But for now, I don't have an edge playing these without news. And then, moving to the flip side with news, I've got a $200 expected value per trade, and I'm up $19,000, and that's definitely decent. But if I can narrow down my trades, I get rid of all of my trades during regular trading hours, get rid of my after hour trades, and just focus on just the pre-market trades. Now I've got a $550 expected value per trade, and I'm up $27,000 on those. And so that's what I want to do. And this is both how I find an edge. I just showed you from going from being break even after a year to narrowing it down to just the set of trades. I'm up $27,000. This is the kind of data that can give me the confidence to stick to a specific setup. I'm going to stick to just these reverse split plays with news during pre-market. And then I'm going to throw out all the ones without news because the data says that I just have no edge there. And now you have to do this for yourself though, right? Like my stats here don't apply to you at all. Like even if you know my exact like entry and exit criteria and what I'm looking for in these trades, you're not going to trade them the same way as me, and your stats aren't going to be the same as this. So even if you have a setup that potentially has an edge, you have to do some sort of analysis like this to see, do you have an edge playing that setup? And just because somebody else has an edge playing a certain setup doesn't mean that you have an edge playing a setup. And so that's my reverse split plays. And so, that's how I take my whole set of all the trades that I take. Then I can get a subset of them based on certain criteria. In this case, reverse splits. From there, I can get a subset based on news or no news. And then another subset based on time of day. And so I'll kind of break down all of my trades in similar ways in order to find an edge. Or if I'm trying to focus on a certain setup, then I'll have that specific criteria, and I can take just that set of trades to see how I'm doing. And so I just want to walk you quickly through my other setups where I have an edge. And this is basically going to be all of the setups that I should be taking. And this is related to that video I did last week. I'll put a link in the description below, where I was talking about how I need to really get a handle on taking those random trades. I really need to be patient and wait for my setups to come. I need to wait for my trades to come to me and not take all of the random trades that I'm just losing money on, such as those reverse split plays without news. So here's some of my other setups. This is my stats for overextended gap downs. This is a short setup, mostly on NASDAQ stocks. I just started playing this more recently. I don't know, about the past 6 months, 9 months or so. I'm up $9,300 after 24 trades. So I've got just enough data to have some confidence in this, but I know as I take more trades, these other numbers are gonna start becoming more accurate and closer to what my actual edge is, or what it will be in the long run. But my win probability is 83% with these, and that's great. It lines up with what I hear these stats are based on other traders who have a lot more experience with this setup. In general, you should have about an 80% win rate with this setup, and my stats are showing that. And then my win-loss ratio is about 1.3. And in this case, this is one where I would still prefer it to be closer to 2-to-1 or greater, but because the win percent is so high, I'm okay with a lower risk-reward ratio on these trades. And I think that this is an effect of my small sample size, and I feel like the risk reward ratio is actually much bigger than this, because when you're getting good entries on these trades, you're risking very, very little. Hopefully if you're getting in on a spike towards red green and you're just risking off of red green, you've got a small risk with big downside potential. And my expected value on these is $660, and my standard deviation is only $600. And so that's something I also like to see. I want to see a smaller standard deviation and compared to my expected value, because that means I'm going to have less variance in the setup. And in this case, that reduced variance is likely coming from the higher win rate. Since I'm more likely to win, it's just going to be a smoother P&L curve. And we can take a look at that. And this is what my P&L curve looks like for this setup. And so on a lot of these, I can just look at the P&L and I can decide like whether or not that looks like it's a setup I want to pursue. And pretty much on every one of my setups that are the setups that I should be trading, the P&L is something similar to where it's really from like my first trades, I've been positive and it has a nice smooth uptrend. So that's the overextended gap down. OTC pump and dumps short. This one I don't really have quite enough data, but we'll talk about it anyways. I'm up $3,700 on those. That's after 11 trades. So that's like, yeah, this data, these numbers will move much more with every trade that I take, and these just don't come around that often. My win probability right now, win rate is 63%, and my expected value is $1,169. And my risk reward ratio is 2.5, and that's why my expected value is so high, is because this has a better risk reward ratio and that win rate is above 60%. I expect those numbers to improve on this actually, and I'm definitely going to continue playing this. There's my P&L on this. This is the zero line. But as I play more of these, I'll have more accurate data, but I do expect to have quite a large edge in this setup. And then finally, it's the OTC multi-day breakouts. It's my bread and butter setup. This is where I first found an edge. This was a setup that I focused on exclusively when I was down at all-time lows, when I was just starting out. This setup brought me back into the green overall very quickly, and it's really never failed me. It's been a good setup for the last like 2 years that I've been trading it and been aware that it was one of my strongest setups. So this one I've taken 289 trades on this setup. I've made $89,000 on those 289 trades. So, I'm approaching $100,000 of profit on just this setup alone. My win percentage is 60%. That's perfect. That's for this setup. That's where I want to see it, is 60 to 65%. I do expect with this large of a sample size, I do not expect these numbers to change much from where they are right now. My risk reward ratio is 2.2. So I've got, 2.2 to 1 risk reward ratio, basically a 61% win percentage, and that's giving me an expected value of $450 per trade. And we'll take a look at this P&L because it's just a really nice, just fairly continuous uptrend with not many downswings. The main thing that happened was right around here was where I bought my house, and I took about 2/3 of my trading account to put as a down payment for this house, and it was well worth it. But that definitely set me back. That took my account way back down below PDT. And then also around that same time was when I started focusing more on the reverse split plays, and rather than just exclusively playing OTCs. And so a combination of those two things plus just the slow market for most of this year led to like a real slow grind here as I was trying to build my account back up. And you can see though that it's still on an uptrend and it's increasing in its slope. Now that my count is bigger, I'm back to where I'm getting bigger wins on these because I'm taking larger position sizes. But this was one graph, like throughout all of my trading career, I'll tell myself this all the time, like when I look at my overall stats and I've got like these big wild upswings up and down where I'm making lots of money, and then I'm having big downswings where I'm just losing a lot of money. And I'll tell myself, I'll look at this sheet and I'll tell myself, this is what you need to be focused on. You should only play OTC multi-day breakouts, because this is what my P&L graph would look like if these were the only trades I took. If I cut out all the other random trades and all the other setups that I've traded along the way, this is what my P&L would be like right now. So it's at least something that helps me kind of stay focused and remember that if I can cut out those random trades and if I can just stick to my setups, my P&L is going to be doing some sort of much, more smooth curve like this rather than the wild up and down swings that I take right now. Because all of these setups that I'm focused on now have similar P&Ls where it's a fairly steady uptrend. And now that I have both long and short listed and OTC setups, that should be a sufficient variety of trades that if I can just be patient and wait for these trades, I should really be able to grow my account exponentially from here on out. So that's kind of my process. That's how I go about finding various edges with different setups in the market. I'll learn a setup, I will take trades on that setup, and then I'll look at those stats. And then those stats can give me the confidence and the actual data to say, yes, I have an edge on a given setup, or no, I don't have an edge. And then I can also do things like we saw with reverse split plays where I can take an overall higher level setup and I can, by adding more criteria and getting more specific on the setup criteria, I can narrow down the focus and hopefully find bigger edges within certain setups. So I hope this information was useful to you. I know that was probably a lot of info, and again, if you have any questions on how I'm calculating any of those numbers, please just DM me on Twitter at Sublime Trades. If you like this video, please smash that like button, subscribe to my channel for more content like this, and I'll see you later.